Welcome to the June 5th, 2023 Advance Report for McGowan Group clients and NetWorthRadio.com listeners. I'm Spencer McGowan, your financial weatherman with your weekly fast-paced tour of the global financial markets. I'm also president, McGowan Group Wealth Management. You can go to NetWorthRadio.com, contact us there, set your time for a brainstorming session to upgrade your plan according to the current markets. And I'm going to cover some of the important changes that are about to happen because of the data that we've reviewed. This is the federal budget. We did cover it last week, but I want to say something about NetWorthRadio.com and YouTube McGowan Group. We've been saying for weeks that the kabuki theater of the politics in Washington, where they call each other names and they scream default, well, we've been saying they'll work it out. And this week they did, and I'll show you the impact of that. But it helped investors who might run for the hills and miss this week's rally. Well, it helped investors to actually add bargains instead of running from the hills. And I'll cover some of the other times that we've added using the cash that builds up in the portfolios. We normally cash flow between 5 and 7% depending on the discipline. And so we've always got residual cash in there to reinvest in great bargains during downdrafts. Well, this was a similar downdraft, but not as bad as March. Why did we say that Washington is unlikely to default? In the past, they did a partial government shutdown, and they simply lived on what they bring in, like you and I, regular people, where you cut your expenses. Here's the federal budget, $6.2 trillion, borrowing $1.4 trillion. Here are two categories that are not defense, Treasury interest, Social Security, Medicare, and Medicaid, right? Those are the biggies. Other is $834 billion. Seems like a big number for something called other. And then non-defense discretionary, $932 billion. That was nearly $1.8 trillion, meaning that if you just stop those for a while, then you don't have to borrow any more money. Well, Janet Yellen gets a Bozo Award because she starts yelling default, and of course it sent the markets into a short-term panic, and everybody was worried about it. What's interesting is the resiliency of the equity market during this kabuki theater in Washington. Next, all right, this is treasuries. Treasury yields, 339,000 net new jobs in the month of May. That is 1/3 lucky people that got a job, but that's the net number. Well, the Federal Reserve might think that's too much, and so they might take the rates up. This is the 90-day T-bill, and it went to 5.25%. It's telegraphing that here in June, the Fed might do one more increase. But something else is being telegraphed by the 10-year and 30-year. The 10-year is the green one, and that's the basis for mortgage rates. During this default debate, if I owned a treasury, I might be disturbed. But what we brought to you weeks ago was to say, hey, Warren Buffett bought some more treasuries at a high yield, or T-bills, and at the same time, there was not much nervousness here in the Treasury market. In fact, during the caustic debate and the potential failure of the debt ceiling deal and the potential default, Treasury yields actually went down. In other words, there were buyers. So demand didn't disappear, and you're back to a level that's about like the beginning of May, when we first said, don't worry about that, they work it out. And they've been doing that for 30 years. That helps. So now we get to the price of your home in North Texas. What's happened to the price of homes? I've got a little surprise. Right here, this is actually an increase so far this year in home values. From last year, it's a -1.5% on the average price, the median price of a home here in North Texas, and it's down 7% from the peak in June when there was a buying frenzy. And some of those people that got into bidding wars, they're down a lot more than that. However, that is not a complete disaster in the housing market. Most of the new buyers, by the way, are going to new homes. That's where demand is the strongest. This is the Dow Jones Industrial Average. Now, here's the beginning of the year. This is March. The low was 31,500, a little bit below 31,500 at the point that you got Silicon Valley Bank failing, and behind it you had Republic and Signature Bank and now potentially PacWest. PacWest has not failed yet. Well, that turned out to be a good buying opportunity, and we added some names using our residual cash. And especially if we were reinvesting, we got to take advantage of that. Well, here, 33,600 at the peak on Friday. You see, debt ceiling, not an issue anymore. Does that set up a future rally? The volatility index, when it's high, tends to say you could have a huge correction, and when it's low, it tends to be a buy signal, and it hit a 52-week low this week. Is it a recession? We cover this quite frequently because the Atlanta Fed has the best measure. The Atlanta Fed goes all around the country, not just Atlanta. They go all around the country, they gather up the data. We've had 2 out of 3 months for the second quarter. What is economic growth right now? 2%. In fact, all the learned economists for the third or fourth quarter in a row were projecting a recession for this quarter, see below zero. Now we're at 2% growth. That says if there's going to be a recession, it's not here yet with 339,000 net new jobs and an economic growth that appears to be about 2%. Not too hot, not too cold. This is the National Home Price Index, and what we're saying here is that, yes, you're positive year to date there. You're down from a year ago. However, the National Home Index does give us one clue here. It's a modest decline from the June peak. Dallas was actually a little bit more. We like the categories of global high yield. We have 4 great managers. Energy infrastructure, because we get paid big dividends, and we have strong potential appreciation in the energy crisis. We like clean technology, and we like medical blue chips. If you want to see a portfolio, then set your time for a brainstorming session. Do McGowan Group or networthradio.com and request a time either by Zoom, or you can get an office tour here at the Crescent. See our Texas Financial History Private Collection. Thank you for tuning in, McGowan Group YouTube. Thank you for tuning in to Net Worth Media today, and our efforts over the past 2 decades to educate clients and help clients make great decisions. That's the reason that we're here at YouTube McGowan Group, Apple Podcasts, Net Worth Radio, and networthradio.com. The Net Worth Media effort is designed to help you make great decisions and address value at risk of loss, fluctuation in the markets. Remember, if we talk about a security, doesn't make it a recommendation until you come down and get a plan from McGowan Group Asset Management, the team that cares. You can set a Zoom meeting or an in-office meeting at the Crescent, and we'll give you a written plan that encompasses what we believe to be the best allocations. This is a team of 10 devoted to you. That includes the research that you see each week from Reuters, from Bloomberg, and from the best sources. We always post links at networthradio.com for what we believe can help you make great decisions, the research that comes up. Now, the Net Worth Media effort is also designed to address cycles in the market, value at risk of loss. At networthradio.com, you can get the ADV form that shows, yes, we're a fiduciary, a registered investment advisor. It covers the costs of hiring our team to help you in the future ahead. It really helps to have an expert team on your side that you can reach by phone, email, and of course, a team that's here for you every week to address what's going on in the markets, because anxiety can often lead investors to make decisions that are either dangerous, chasing things, or selling things when they shouldn't. And that's a big part of our planning effort at McGowan Group Asset Management. Thank you for tuning in, and we look forward to serving you and your family in the years ahead.